Welcome back for another pre-market technical analysis of Gevo Inc. This is Dr. B on Webull, and I will be analyzing the Gevo chart today, December 9 pre-market. You can follow us on Twitter at TAnalyzed for analysis tweets and video updates. Before we get started, I would like to remind you that I'm not a professional technical analyst, trader, investor, or financial advisor. This video is my personal analysis of the stocks I'm currently investing in and trading, so please use the information here with caution and best to use it to confirm your own analysis and not as a guide for your investment decisions, which can be potentially risky. Alright, so let's dive in. Gevo is still bullish. On the monthly, we are having a hammer so far, and on the weekly, we are forming a dragonfly doji in a downtrend, which is bullish. We still have 3 trading days in this week, however, so this may change. Alright, so the crossing of the 9 EMA over the 50 EMA should be happening today, and this indicates that this bullish trend is strong. On the daily, as we mentioned in yesterday's update, the EMA have changed course and are pointing upward right now, which is bullish. The day bounced off the 20 EMA and closed above the 5 EMA, which is very good. The strongest signal I am seeing today is the relation of yesterday's candle with respect to the candle from the day before. They are forming a marginal case of what we call the bullish engulfing pattern, which happens when the green candle encloses the body of the previous red candle. Also, notice that the lower shadow wick of the yesterday's candle is long, which means there is strong rejection of the lower prices, and that's good. If we check the levels of support and resistance, we will find that we are bouncing off the median line of the pitchfork in the uptrend. Once we clear this level, we may be heading to the inner and then the outer levels of the resistance trend lines of the pitchfork, and we are talking at a level of 2.33. This, however, won't be that easy because the resistance we were experiencing yesterday is coming from one of the strongest resistance and support lines, which is the 1.85 level. If you don't remember, let me remind you that this level 1.85 is one of the main support levels and the strongest ones for the structure as Gevo was dropping over the last 8 months. Also, it's the top of the latest spike that we had in August, the day we were trading at a volume of 1 billion. So this is a very strong resistance line. So now we can actually appreciate the resistance and understand why it stopped us yesterday. Although it's not meant for such short periods, but it seems to me that the price has double bottomed at the 1.69, which is the 61.8% Fibonacci level. If we draw the Fibonacci retracement levels that we can see here. So it's from here to here, and you will notice here that this is the 169, and I can see a double bottom, which is a bullish trend, and it means that a reversal is happening and we are heading upwards. On the 4-hour chart, the chart is bullish with bearish short-term trend. We can see that it formed an indecisive candle here with equal wicks, and then after that it got rejected from that 1.85 and it dropped a little bit. When it dropped, it actually tested all of these EMAs, and then we can see that there was a strong rejection and a lower wick, which again a little bit bullish here. But in general, we bounce strongly off the inner support trend line of the pitchfork. Similar trend can be found in the 2-hour chart, we can see here that this is bullish. It's starting to flag. We can also see that there is rejection here with this long wick of the last candle. Same in the hourly chart as well. We can see here that we are seeing two candles with a strong rejection, and we can also see here the falling wedge that is forming right here. If we go to the 30-minute chart, we will see that actually there is a green candle here showing that it's starting to bounce off the lower bound of that falling wedge. My guess is that it's going to actually retest that level. It's very possible to do that before it bounces back up. So as we move, it can briefly test this one just to use that old resistance as a new support. All right, so what's the plan for tomorrow? I will be looking for the 1.85 level carefully. If it rejects and drop, and let's go back to the daily. If it rejects and drops below this one, it doesn't go above it, then I will be looking at strong drop that may actually go all the way down to 1.37 level, which is the 78.6 Fibonacci level and the 50 EMA as well. As we move forward, this becomes the 50 EMA will align perfectly with that lower bound, and that could be the next support if the 185 does not break. If it breaks though, we may be going to 2, and then it can also break that and hit to 2.3. So this can be a good day trade for you, but make sure that it breaks the 185 and it stays above it. Don't just buy at the cross, because it could bounce back down. If this is a big run, and here something similar, I'm talking about something similar to this run here, then let's see what levels should we expect. So if we go to the Fibonacci extensions, we can start from here, go here, and if that is the bounce back up, then this would be our new swing low, and these would be our extension levels. So let's have a look at this. Here we have the 100% is at 3.5. Wouldn't that be nice if we can go there? All right, so these are the levels that we can expect to go up as we move, if that is a big bounce. Now this leg, I'm feeling that it has to have a catalyst, but at the same time, looking back in the near past, we had a similar run without a catalyst, so that is a very good possibility here to run up to 3.5 if tomorrow is the day. So if you like this analysis, please show your interest by subscribing to the channel. This way I know get some sense of how people are interested in the channel, and it gives me some motivation to create more videos. Also, please leave a comment and tell us what is your position if you are long, or what is your plan for the day trade tomorrow. Good luck everyone, and see you in a future update.